Hey everyone, today we're diving into business contracts, but probably not in the way you're thinking. Forget all the legal jargon for a second. We're on a hunt for something else, the economic truth hiding between the lines. And trust me, finding it can totally change how you look at a company's financial health.
Think about this for a second. Every single month, organizations are moving around billions, sometimes even trillions of dollars. And no, this isn't just monopoly money. It's the real deal. It's the lifeblood pumping through our economy, through all those invoices, leases, and service agreements that make the business world go round. But here's the thing. Those transactions, they're not just numbers on a spreadsheet. Every single one is tied to a contract. Those super dense legal documents that spell out obligations, conditions, and risks. That's where the real story of a business is actually written.
And this is so important. If you're only looking at the final accounting numbers, you are literally just seeing the tip of the iceberg. You're completely missing what's going on underneath the surface, the true economic reality that's actually driving the business.
Which, brings us to what I think is maybe the biggest and definitely the most common mistake an accountant can make. It's this one critical oversight that can completely twist a company's entire financial story.
You've heard the saying, right? The devil is always in the details. Well, for an accountant, those details, the ones that really matter, the ones that show you what's actually happening with the money, they live inside the legal language of the contract.
So, what happens when we skip that fine print? When we just take the summary from the sales team and jump right to booking the numbers? Well, you can end up booking a massive sale that isn't really a sale. Or you might record a profit that, whoops, you actually have to give back later. You end up operating on assumptions, not on facts. Okay, so how do we avoid that trap? How do we get to the real economic truth behind all those numbers? Thankfully, there's a fundamental principle in accounting that's designed to do just that.
It's a core principle called substance over form. And the idea is actually pretty simple, but it is so powerful. It just means your financial statements have to show the economic substance of a deal, not just its legal form. In other words, you account for what a deal actually does, not just what it's called on paper.
So think of it like this. The legal form is how a deal looks on the surface, but the economic substance is how it actually functions in reality. For example, a contract might be labeled a sale of an asset. But if you read the fine print and it says the seller has to buy that same asset back later for a higher price, well, its true function, its substance, that's not a sale, that's a loan.
It all boils down to one single rule. This is like the golden rule of professional judgment. Understand the transaction before you account for it. Seriously, it's that simple. And it's completely non-negotiable. All right, so let's make this real. I want to walk you through a case study that shows just how big the gap can be between what a deal looks like on paper and what's really going on underneath.
So here's the setup. You've got a big car manufacturer, and they make a pretty hefty payment to their own finance company. The one that handles all their car leases. On the surface, it seems simple enough, right?
Okay, so the finance company just got a huge chunk of cash. The easy thing to do? Just book it as a one-time gain. It would make the quarterly profits look amazing. But is that what's really happening here? And this, my friends, is where the detective work starts.
To get to the bottom of it, you have to go straight to the contract, and you have to start asking the right questions, like, is there a clawback clause? Could this money be taken back? Or maybe this payment is really just to make up for lost interest income on those leases. Does it guarantee the car's value down the road? See, details like these, they change the entire picture.
And there it is. The contract tells the real story. That big payment? It's not a bonus. Its economic substance is to make up for the lower interest rate the finance company is offering to customers. And that means you absolutely cannot recognize it as a gain all at once. Nope. It has to be spread out, amortized, over the entire life of the car lease.
That case right there is a perfect example of why you have to dig deeper. And to do that kind of work all the time, well, it takes a certain kind of mindset. In the accounting world, we call it professional skepticism.
Now, let me be super clear about this. This is not about being cynical or just not trusting anyone. Professional skepticism is a disciplined, evidence-based way of thinking. It's about asking probing questions and checking what you're being told by, say, the sales team against the cold, hard facts written in the contract.
I absolutely love this quote. Accountants aren't cynics, we're disciplined realists. And honestly, in today's world of corporate hype and super complex deals, having that mindset is more important than ever. It's all about staying grounded in what you can actually prove.
So, okay, what's the big payoff for doing all this extra digging? It's huge, I'm telling you. When you start thinking this way, you and your whole department stop being seen as just the know people, the gatekeepers. You become a real strategic partner to the business.
And you know what? You can start doing this today. It's a simple 4-step process. Really, just pick one contract a month to start. Break down the key terms, payments, risks, who has to do what. Then go talk to the people in operations and make sure you're on the same page. If you do that, you'll build the habit, and I promise, you'll start seeing patterns you never ever noticed before.
Look, the ultimate goal here is to change the culture of the whole company. Just imagine if accounting was brought in on big deals before the ink is dry on the contract. When you bring that expertise in early, you can spot risks, you can flag potential tax problems, you can actually help build better, smarter deals from the ground up.
So, if you remember just one thing from all this, let it be this. The numbers on a financial statement, they tell a story. But the contracts tell the truth. Thanks for tuning in.